Afternoon all, how are we all doing? Everybody survived the Euro? Crazy reaction, wasn't it? Move stuff around, there we go. So, how is everybody? Afternoon, Peter. Today is the worst day so far. Looks like we'll end in red. I guess it's part of the game. But it hurts after the money rain. Yeah. Not quite sure why you would end in red today. Anyway, same for me. Like you said, part of the game. Why is everybody losing money? What's going on? The euro has dropped. That's all that's happened. Shouldn't be hemorrhaging cash. I've taken a 0.57 drawdown today. Not a lot. It's only 0.5%. I have to say, though, the month is going crap. But anyway, it's just the month. Morning, Hamza. Afternoon, even. John, how are we doing? Afternoon, Paolo, Amy, Joaquin. David, always a pleasure to be on stream watching and listening to you. Always a pleasure to have you. Afternoon, can't say that. Yaraki? Peter, afternoon. Max, Jimmy, Ismet, Evans, John. Just goes to show I had the wrong positions on given the ECB hiked and ended up making money. 50-50 shot. Half of this game is luck. Partial closes. Yeah, we'll be taking some drawdown on partial closes on Euro longs. Afternoon, Johnny. Mac, Virginia, ciao. I'm about 0.7 in the red. You're about 0.7 in the red, and it hurts after a 5% a day up. That doesn't hurt. That's losing less than 20% of what you made. That's not hurting. That's just controlling drawdown. That's normal. So euro, obviously, well, the rate went up. We are now at 4.5. This is what I said this morning. It was quite a possibility of that happening after what had been said. The ECB came out and said, I think you're underestimating our chances of hiking. And they did. So, yeah, we got the hike. Lagarde, in the monetary policy statement, it was very much a case of we're not sure what we're going to do. It's going to be data driven. Same stuff they always say. Afternoon, Astro. During the press conference, though, she has come out and said the current rate cuts will help deliver the 2%. Some members didn't draw the same conclusions, i.e. they wanted to freeze. And also she's come out and said, I'm not saying we are at peak rates. Okay, so very much like the Fed, the Euro, the ECB have turned into the Fed. Basically, it's just woolly. Yeah, it might be the top, but might not be. Same as the Bank of England. We're going to go 0.75. No, 0.5. No, 0.25. Might go 0.5. Don't know. So nothing is clear. This is why this market is doing what it's doing at the moment. The whole market is completely confused as to directional bias at the minute. So what I'm taking from Lagarde is still speaking at the moment. I think she's still going. She's still going. So at the end of the day, they have increased the rates. They have said it's quite possibly going to be terminal, maybe not. So obviously what the market has done has had a negative reaction to it. They were expecting one more rate hike where they were promised a freeze. They got one more rate hike. They immediately jumped to the conclusion that that's it. We're not going any higher. Lagarde has come out and said there's a high possibility of that being the case. However, we will look at data and it may not be the final hike. So I suspect what we will find is over the next couple of days, we're back up here again. So I had a stop loss on this euro trade in case basically it came down before the news came out. I removed the stop just before the news because it looked, we were up here somewhere and it looked okay. And then obviously it collapsed. So I've taken a second entry on it. There's no reversal alert down here. We might have had a reversal alert. Actually, I haven't even checked. No, we didn't get one. That was your reversal alert. We didn't get it. So I've just taken a second entry, basically because this is 51 pips and 3/4 of an ADR is roughly 50 odd pips. So I've just taken a second entry just to make sure that I'm scaling in accurately on the position. And if it does run, obviously I will get back in again. The nail in the coffin for this euro US dollar specifically was all of this US dollar news. Again, I said this morning, I just need a break from the US dollar and a little bit of negative news, all of it positive. So everything's going well in the US at the moment, but the US dollar, as you can see, doesn't matter. The US dollar is not having a good time. It doesn't matter what the US dollar does. They cannot rally the market at all. Massive positive news across the board. Yesterday, look at yesterday's news. CPI increase, good. Yeah. PPI increase, good. Retail sales, good. Unemployment is down, good. What's the US dollar do? Nothing. It's dropping. Yeah. If we get a piece of negative news on this US dollar, this thing will be through the floor at 200% of ADR. We just aren't getting it delivered. We're getting nothing but positive. So you can tell how weak the US dollar is. If we are giving nothing but positives about the US dollar and all it is doing is dropping on positive news, just see what it's going to do when it gets some bad news. Yeah, we're waiting for it. So tomorrow we've got Empire State Manufacturing and University of Michigan. These are very, very hit and miss news events. However, if we do get a negative on one of these, I can see it's dropping tomorrow. So the market is really not interested in buying this US dollar. I think we probably will get a little bit of an uptick on it today and probably start to form a range across some of these US pairs, but they are not able to crack this US dollar yen high. They haven't managed to get anywhere near that place we were at last week. If you look at the pound US dollar, we have dropped on that, but the pound is weak anyway at the moment. The pound comes down with the euro. So this move that we're seeing on the pound happening at the moment, that's euro based. Yeah. Anything that's bad for the euro is bad for the pound. Anything that's bad for the pound is bad for the euro. We are the biggest trade partners with each other. So we affect each other's economy in the same way as the Australians, the New Zealands, the US and the Canada. So this drop on the pound that we're seeing isn't related to that US dollar strength. It's related to the euro. But yeah, market's just not doing anything still. It's not doing what it's meant to do, and it's not really doing anything. If you look at the ADRs we've got, there's a few of them in there. Sorry, market's open, waffling away. Pre-market range is too big on the NASDAQ, haven't taken that one. I've got the Dow and the S&P. S&P I'm already long. Okay. So we see where we go with these. This movement that we had off of the US news was very small. There wasn't a lot of it. So short on the Dow. So I don't think there's a problem taking any of the ORBs today because we had a little bit of a pop on the NAS, but very, very, very little movement. When you look at the size of the Globex moves and then you look at the size of the move on the news, very little, is it? So we should get a decent move out of the indices this afternoon, I think, especially off the back of that news. Hedged on the S&P. No, I'm not. Why are my S&P positions closed? What the hell's going on? Sorry, just need to see what happened there. Time. Data center connection failure. Sorry, I just need to see what happened. The buy was closed due to stop loss. Closed out in loss. Why did it cancel the pending? It didn't cancel the pending orders. Where did my pending orders disappear? Cancelled. Buy stop. Sell stop. Cancelled. NASDAQ. That's fine. What? Okay, I've been recoding the EA today. So I've obviously broken something. I don't know what has gone on there. Didn't even place the sales, did it? Okay, I've broken something, basically. So $1,300 loss on the S&P for some reason. Don't quite know what that was. Anyway, DAX this morning. I banked 3 grand basically off the DAX this morning. We had a really nice clean break today out the pre-market range, straight down. Took it off at that low. We were watching this at the lows. So took 2 trades off at the lows. Nice and easy, clean break. So it's thrown me. I don't know what the hell that. I need to watch the replay of that and to see what that was doing. I have no idea what that did. Or why. Haven't changed anything to do with order placement. All I've done is change some file export stuff. So what I've done there. So NASDAQ, S&P downside, if we are going to break short, which I should be short on, I'll take some shorts. Leave it. Watch this low here. So this was a propulsion gap, which we tested twice. So watch this level for support, which is 2R to the downside of the pre-market range, which is only 5 minute here, actually. Other than that, it's the pre-market low and then yesterday's low, which is all the way down there. There's your 5 minute opening range. That 5 minute opening range is too big to trade. The NASDAQ, again, 5 minute opening range, too big, far too big, 500 on a 366. So that's pretty much 30% of the average daily range done at the open there. So not going to take that one. That's broken short. If you are taking it, Dow Jones, I am broken short. So hopefully we'll get a TP on this one. And then I can recover that loss on the S&P. This version's working fine. Confused. So downsides on the Dow are very similar. That propulsion gap that was retested at 4R. Then we've got the pre-market lows and yesterday's low, which is down here. That is if we're going low. Obviously, if we're going to just do a false break, we've tapped straight into that propulsion gap, and there are buyers down here, so we might get bought back up. Upside, very, very close to ADR high, which is also yesterday's high. So you've got a very nice resistance up there if it's going to try and go long. So we'll watch those, monitor that, see what it does. Watch the replay and figure out what the hell happened there. 30% off for new traders who weren't able to withdraw and lost their accounts. What? What are you talking about, Brian? On another 1K made on NAS pre-market. 30% off to new traders who weren't able to withdraw and lost their accounts. What does that mean? You've missed the first part of that, whatever. I don't know what that means. Francisco, they had a stop loss. What, the trades? No, they didn't. Did it? Oh my God. Even so, that shouldn't have cancelled any pending shorts off. I need to rewatch the replay and just see what happened. I missed it all, missed the whole lot. Anyway, I'll worry about that later. Afternoon, Fletch. Afternoon, evening outro. What is a propulsion gap? Go and watch a video on the website in the support, resistance, and propulsion. There's a link that will explain it all. I'm not going to go through it in here because it's all explained in that video. Afternoon, Alan. RSI extension and ADR2 on what? Bloody horrible news this afternoon. Yeah. It's my first post up higher. There's no other post from you, Brian. First post I got to says 30% off to new traders who weren't able to withdraw the profits and lost their accounts. That's the first thing you posted. Unless the chat has glitched. Everything's glitching today. I'm going to start glitching in a minute if we don't get a push down on the Dow and I make my money back on that loss. Oh, the joys of forward testing in EA. There's no stop losses on that, on this. Oh my God. Right. Sorry, I've just realized what I've done. I'm running the EA on here, yeah, in what I call visual mode. So I've got visual mode on. The trades are being taken on the VPS. I've just suddenly twigged what's happening. I haven't uploaded the EA new version of the EA to the VPS. The VPS is trading a completely different version of the EA, and I'm using the same magic number on here with a completely different set file to what I'm using on the VPS. So I need to turn auto trading off on this because otherwise I'm going to completely screw myself. I've just suddenly realized what I've done. Okay, that makes total sense now. Anyway, my problem, not yours. Did you end up getting out of EU? No. So basically with the EU, what I did was I cancelled off my stop. So I had a stop here pre-market somewhere around here. Basically just because I didn't want to get the market stop me out, basically go the wrong way before the news. So I removed the stop just before the news, and I was expecting a push, especially when we got a 4.5. We didn't get it, so I've just scaled into a second position to average in, and I'll get out when we push back up. Oops. And then I think I probably will just get out of this. I don't really want to be in the euro US dollar long. My God, what is wrong with my technology today? Can't execute any orders either. Let's go back to the old days in the pits where we shout at each other and write down stuff on pieces of paper and then give it to a woman who inputs it on a big terminal like that. Everything used to work then. Right. Reconnecting. Let me just get these TPs in place. Are you back? I tell you what, I'm ready to throw these ECNs out the window. Prime accounts and pro accounts only at Forex. The ECNs meant to be the best connection, ECN connection. This is utterly awful. Just disconnects all the bloody time. Just about hits TP on the Dow. So nearly there. Oh my God. Just watching this Dow because this is the only thing I've got on now. So just going to lock one in with $1,500, basically just to make sure I get back that loss. I've got 3K banked from this morning on the DAX, so I just want to get that loss back from the S&P. Just in case this propulsion gap holds. Right, it's going to, looks like it's dropping. So we just cracked that low. The propulsion gap's just about to fill. Trying. I think my terminals, there we go. Propulsion gap's filled, TP hit. Okay, so out with 2,900, 2,700 runner to see if we can get down to the pre-market lows. Right. Now this has come back to life. So I'm going to put my TPs just above break even, and I'm going to scrap this Euro US dollar. So the Euro, basically, I'm not convinced we're going to get any strength or weakness in the Euro. I think the Euro is going to go back to previous, just after COVID, basically, for the year and a half after COVID hit, the Euro was totally neutral. It was the whipping boy of the market. And basically every other currency that either pushed or pulled moved to the Euro. I think we're going back to that state now. The market, very similar to the US dollar, hasn't got any confidence in Euro at the moment, and it doesn't think it's particularly bad. There's no pluses or minuses for it whatsoever at the minute, based on now what we've had with the interest rates today. As you can see, the market's not happy with the interest rate rise, so it's definitely not going to be happy with an interest rate freeze. So that's the next step for the Euro. So I don't think we're going to get much of a push on this. The US dollar, I think, is going to weaken when we get some negative news, which will give this a push back up. But I think what we'll find with the US dollar is it's going to be very neutral as well. And from what we've seen over the last 6 weeks, and now we're in the middle of September, having really not seen any signs of getting out of summer trading, I think this is the new norm at the moment, while we're waiting for the market to get to these terminal rates. So I want to get out of this Euro US dollar. I don't fancy it at the moment. I've got the pound US dollar on long, and the pound US dollar is pretty much the same as the Euro US dollar. If we get US dollar weakness, this is going to go up as well, but the pound has got more chance of rallying because we've got another interest rate coming on the pound. And our inflation is still an awful lot higher, which means we've got more potential rate hikes on the cards. So we should get more for this. So I'm kind of doubled up on exposure on the Euro US and pound US. So I'm just going to try and get out of that one. Euro odd, 150 ADR. So we're still moving down on the Euro, coming down hard. That Euro US dollar, as you can see, is not coming down hard, which means we've got a weak Euro US dollar as well at the moment. Market's trying to push back up. There's a lot of rejection on the S&P. The Dow is just pulling up from that propulsion gap. So this break where we started entering longs, this is where they started buying. Looks like they're rebuying back at this level. S&P, a lot of rejection there. Look, wick, 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 wick. Bodies are all stuck there. We are not interested in going back below that level at the moment. So there's a lot of buying coming out of this propulsion move that we had there across all the indices. Same with the NASDAQ. Not quite as pronounced on the NASDAQ because we haven't gone anywhere. got alerts going off all over the place at the moment. I'm going to go through all of these ADRs in a second. This market this afternoon is going to be hectic because we've been waiting for this news for a long time, something to kickstart the market. So these ADRs are going to keep rolling in this afternoon. We've got some weekly ranges hit now. Finally, we're on Thursday. We've got RSIs lighting up. So it's kind of being back to normal at last. We just catch up on the chat. We're going to have a look at some of this. My terminal also not letting me enter trades. Hasn't been working for 20 minutes. Well, you got a problem there. Nothing locks up for 20 minutes. That's you. That's your PC or connection or something. How much more profitable is the new ORB EA compared to the old version? Hey, no idea. Different. It's not more profitable. It's just a different way of trading the open. This new one is taking trades depending on range size. Does the new one also include ADR? ADR, not ATR. Yep. Difference in performance on backtest. You can't compare the two. They're totally different. One is a hedging strategy and one is a stop loss strategy. Totally different strategies. You're going to get totally different results. You can't compare them at all. But it's working pretty well. I mean, I've just finished. There's two sets of backtests that I'm running on the DAX at the moment. So on 1200 passes, 1200 permutations, I've got 834 profitable. So maths. %, of system parameter permutations are profitable, which is well within that bell curve. So 60% bell curve. When you're doing back testing on robustness testing, you're looking for your results. When you do a system parameter permutation tests, you want your results to ideally exceed the average bell curve of 60%. So you get 20% outliers, basically, either side. These are extremes, which are highly unlikely to be repeated. So these are curve fit parts of the backtest. The bell curve in the middle is where the vast majority of the results, or 60% of the results, sit. Stopped out on the Dow. So flat on, where were we? Flat on the Dow. So out with 3,100. So 3,100 there, 3,000 odd on the DAX, and stupid loss on the S&P. I should be short on the S&P, but I'm not. So yeah, so when you're doing the back testing, basically you want your results, at least 60% of your results to fall in profit, which 70% of them do with this back test. So this first back test that I've run is on multiple system parameters, but closing positions at end of the Frankfurt session. The second back test that I'm running right now is what I call an end of day close. So we're not closing at the end of Frankfurt. We are running through the New York session on the DAX, and we're going to close at end of New York. So so far that's doing pretty well as well. 233 tests run. And we've got 179 profitable. 179 divided by 233 is 76% profitable. So all testing at the moment is just showing it just makes money, all of it, which is good. That's what we want. But I've got more testing to do. So Euro's still dropping. Oh God, this terminal's disconnected again, isn't it? Yeah. So obviously I need to go through the results and see what happens. So Brian, potential new prop Under Pro, EU regulated, and trades are placed on ECN account, apparently in full compliance with regulatory bodies, offering free accounts for my Forex fund traders who were trading for 3 months plus. How are you going to prove that? You can't access any of your information on my Forex funds. How does that work? Under Pro. Never heard of them. Website. Never heard of these guys. Let's check them out. (2019) updated 2022. So they've been around for a year and a bit. So never come across these. They're obviously not advertising very much, these guys. I've never heard of them. What's a 100K account cost? $550. So they're more expensive than E8 at the moment. Yeah, I guess they look all right. No time limit, it's 80% split. Can you use EAs? Well, they spent a lot of money on graphic design, haven't they? Yeah. So how'd you get the free account? Free accounts to my Forex funds traders who are trading for 3 months with my Forex funds. How can you prove that? What do they want? An email that of something, or you can get it. I have to have a look into it. Let me know, Brian, what the details are. DM me in Telegram. What's the difference between back testing and forward testing? Forward testing is basically live testing. So this is forward testing. I am trading with it live. Yeah. So you can see same trades taken. Dow, I'm out. I am short on, I'm hedged on the S&P. This is what should have happened. I should have been hedged on the S&P. Yeah. So forward testing is just using it and seeing what happens, basically. Apparently, you let sign up. I'll send you the vid. I can't type today. No, you can't. I think they help people build prop firms. What this company? Oh, white labeler. Oh, look at the admin. Recognize this admin? Fiddlecrest. I've seen a few admins that look like that. Oh, right. So this is it. So 8th cap, and these guys are the ones behind most of the prop firms out there. Interesting. Might give him a ring. Thinking of starting a prop firm. Make much more money. If I set up another VPS MT4 with the same strategy, same account, and same magic numbers, will it work or will it cause problems? Or is there another way to back up VPS? Why would you want to do that, though? basically your MetaTrader works on magic numbers. So if you've got a load of trades opened with an EA and you're moving over to another VPS, restart it. But depending on what your EA's logic is, you'll have different results. So for example, if you're using the market reverse alerts EA, first time you turn that VPS on again from scratch, it will reinitialize the EA and it will do all drawdown control again for you. I don't know what would happen. It's not designed to do that. The reason you use a trading VPS, and there's very little difference between them, but the reason you use trading VPS companies, they turn off auto updates. The biggest killer for people in trading is Windows. Windows auto update reboots your computer, shuts down your terminal. You come in and you go, why have I not taken any trades this week? Oh, there was a Windows update. Yeah, that's the only reason you would ever have a problem. And it causes massive problems. So not a lot else you can do. But use a Windows trading VPS. They will make sure that everything is configured for MT4. And part of that is stopping Windows Update running. Especially with new VPSs. When you roll out a new VPS, it rolls out a bog standard installation of Windows. The first thing it does is do an update. So you go, oh, I've got a new VPS. You log in, you set everything up, you close down your remote desktop, and then you log back in 3 days later and nothing's happened. Where's my terminal gone? It's shut. Update. It's the first thing it does, update itself. They don't do it with the VPS companies I use. When you make money from us, making money from what we have learned from you. Exactly. Outro. So I'm going to set up a prop firm. You can all sign up with me. You can all give me your $500 for your accounts. And yeah, I'll make loads of money. Brilliant. I'm not really going to do it proper. It'd be a good business to do, wouldn't it? But I'm busy enough. Right, Lagarde has finished talking, so that's the end of the Euro speech. So let's have a look at some of these ADRs. Euro is still dropping. Am I even connected? No idea. Is this even ticking? Yeah, it's ticking. So yeah, Euro US dollar totally stopped, look, down here. So watch this candle here and that low. So there's a good chance that from here we might just put some inside bars in and hover. So this is going to become a propulsion gap. As if by magic, as I was saying it, the hourly candle closed, the propulsion gap appeared. So there's your propulsion gap. So we're either going to retest that and we're going to sell, and there is going to be sellers in the market. We're not going to get back up above that level and we'll be off. Or we're going to get an A-shaped recovery over the next 24 hours and we'll be back up where we were before. I suspect, based on that US dollar news and the fact that the US dollar hasn't managed to rally, that's probably what we're going to do. So I shall be out of that. Did I get that second position on? I can't even remember what I did. So I'm getting out of that Euro US dollar. So we've got plenty of ADRs to look at across the board today. Aussie dollar Swiss, afternoon Neo. Then you can have a Lamborghini. Yep. That man from my Forex funds has got many Lamborghinis. 300 million buys you quite a few Lamborghinis. 1 million buys you quite a few Lamborghinis. So yeah, mods and movies. Tech question. Tried attaching EA to the chart and the journal says it's not an expert. It is not expert and cannot be executed. Don't know. Was it one of my EAs? One thing you might want to do is have a look and make sure that it's sitting in the expert advisors market folder. Yeah. If it's sitting in the indicators folder, the indicators market folder, and you try and drag it over, that might be a problem. Every now and again, it's a really, really rare thing, but every now and again, for some reason, when you download something from the marketplace, it puts indicators in the EA folder or EAs in the indicators folder. So if that's the case, you just need to go to your data folder, go into MQL, go into wherever it was, either experts or indicators, and just move it into the right folder. And then just click the right click and refresh, and then try again. That could be the problem. That has happened a few times. Not often, but it does happen. I don't no idea what it is. It's some weird glitch with MQL5. Did you get another entry on the EU? Yeah. Manual, though, not with the EA. The EA hasn't given a trigger yet, so I've got in with a manual because that's 50 pips apart. I just want to get out of it, really. I don't like it. I'm just adjusting my... so this S&P, I am in on the other terminal. I will do the ADRs in a minute, so it's a bit hectic today, isn't it? So I'm in this over here. Basically, the target for me is now 5R. So what I've done is I've moved my targets it's redrawn. Yeah, of course it has, because it hasn't got any trades on. So my target basically is this pre-market low. Yeah, so I'm looking for a push down to pre-market lows and then a bounce from there. So I'm going to try and get out down at the pre-market lows. That's my exit plan, and then get out on these longs there. If that doesn't happen, obviously I will take TP there, which is fine. And then I will wait for a bounce down there. I'll enter 2 more positions down there and wait for the bounce off of yesterday's low. And that's beyond ADR. So I get the feeling we're probably going to bounce more from here than we are from here, because for the I don't think it's going to get a chance to get down to ADR low today. There's too much volatility going through the FX markets. I don't think we're going to get down there. So that's the plan on the S&P if you are hedging it. Right, ADRs, Aussie dollar Swiss. ADR hit to the upside. If we look at this, there's no reason really for a bounce. Oh no, maybe there is. There is a support there. It's a monthly. Yeah, so that's potentially a nice little bounce point. Market structure is really weird. Everything's really weird at the moment, but we are looking for a pullback on that move. So that looks like a pretty good short, Aussie dollar Swiss. The problem with this one now is obviously the Swiss franc is going to weaken along with the euro. So the Aussie dollar could get another rally off of it, but it's come straight off of that monthly level at ADR. So it's good confluence there. 5-minute reversal alert is just kicked in. So there's your M pattern reversal. There's your reversal alert. So yeah, there's your short. Half an ADR on this is 21 pips. So you'd be looking for a push down. Basically just back down to those lows. If you're taking an intraday scalp, obviously if you want to take it longer, fine. But that's where we should be able to get down to, roughly half an ADR. Aussie dollar, New Zealand dollar. This was a hit this morning. So we hit Aussie dollar, New Zealand dollar hit this morning ADR. We had the main reason this hit ADR this morning was because of the news spike. Obviously, we had the Aussie dollar rates this morning. Not the rates, the unemployment rate, which came out as a positive. So obviously, because it's positive news, the Aussie dollar collapsed. So it pulled down and basically undid the entire move, brought us straight back to where we were. So obviously that news spike caused an ADR hit to the upside. If you measure where we've really traded today, it's actually there. So this move at 150 ADR is probably more like about 125 at the moment. So this is a nice reversal. You had an alert. Ooh, that's tight. Didn't get one there. You haven't had an alert on this yet. So Aussie New Zealand, there hasn't been a short alert on this yet. So this will be your first reversal alert on this. where we are now, we're accumulating back up at 125 ADR. So that would be your entry short. Obviously, that high there is potentially a target, and that is 21 pips, which is half an ADR. So pull down back into that area as a potential support bounce for the Aussie New Zealand. CAD Swiss. So CAD Swiss is now a weekly range hit as well. So we've just hit our weekly range on this. Where are we? Thursday, Wednesday, Tuesday, Monday. So there's the low. So that is the weekly range of the CAD Swiss, which has just been done. We're now on Thursday. So potentially we're looking for a profit take, pull back on that. Maybe tomorrow. We haven't got any CAD news or Swiss news tomorrow. We've got Lagarde speaking again tomorrow morning. Unlikely she's going to upset the apple cart any more than she has this afternoon. So it's all US dollar news tomorrow. So there's a potential reversal there. You could drop down to M5 on that one. You've had the reversal alert on that. We had the news spike. So there was your reversal alert and it's pulled back up. So ugly. Can't really call that an M because that's just a news spike. So yeah, there is a reversal. But it was, I mean, if you'd taken it with the EA would have got you into that. So you're in it. Yeah, potential reversal on that. CAD Swiss, obviously now the bias on the CAD Swiss, we've had positive news for the US dollar. We've had negative news for the euro. So the bias on this potentially is now long fundamentally. Not that the market really seems to be doing what it's saying it's doing, but so that's an ADR reversal, very weak one, but that is also a weekly hit. So just bear that in mind. So it's an ADR hit on a weekly move. So twice as much reason to get into that one. We're also tapping up into a monthly level on that as well. So we're up at these monthly highs here in this propulsion gap where that accumulation was. So we're back in a propulsion gap. So we could well just fill the propulsion gap 150 ADR and then get that bounce back down from there. Obviously, after that, it doesn't matter where it goes wherever the hell it likes. Let me just quickly open the VPS. I just want to see if the VPS took that CAD Swiss. Market's looking heavy. Not really going very far though at the moment. Wait for that to boot up. Euro odd, right? So all the euros. Your guess is as good as mine on these. Long euro odd. Just get into a long on euro odd. Literally, I think, just got into a long on euro odd. Yeah, there we go. Literally this candle. As I loaded it. There we go. Long euro odd. So there's your reversal alert, 150 ADR. And that is also an H1M5 mean reversion. So H1, we extended beyond the 25 level. So I'm in on that one for a push up into propulsion. Target in that propulsion gap. It's not a lot. It's 0.25%. But that's where I'm looking to go. Market's starting to break down quite nicely. The Dow basically is just double topped. It's coming down to a double bottom. We're at the lows there, and we've broken through on the NAS. So, and the DAX as well is starting to look heavy. So, it's all starting to look like it wants to drop today. So, yeah, all of these euros, every single one of these euros is extended, obviously, off the news. So, when you get an extension at ADR off of a fundamental news event, you just need to be aware that this could be a continuation. So this may have hit ADR because the market is now wanting to sell that instrument because the fundamentals have shifted. This could continue to rally this euro to the downside. I don't necessarily think it will, but if I can get a V-shaped recovery out of it and then it decides to go, fine. I don't care. I'm out. But yeah, just bear that in mind getting into all of these. If they're extended on the RSI as well, which we've got in this particular case, yeah, so the Euro odd is extended on RSI. The Euro CAD also is, so I'm going to get into that one. I'm also going to get into the Pound CAD today. So all of these basically our RSI extension. So we've got a confluence of ADR and RSI. So it's ready for a pullback. So much better ones to trade. Euro CAD also is extended on the weekly now. So going back to the beginning of the week, which is there. So there's your high of the week. That is your weekly RSI extension, ADR or AWR in this case. Again, like I said, I've said for the last week or so, just be a bit careful with these weekly ranges. Don't forget, we've been in contraction for 6 weeks now. So the markets have not been moving their normal average daily ranges. Therefore, the average weekly ranges are also contracted. So when we're hitting these weekly ranges, that could well be like 50 or 60% of what we used to achieve on a weekly range back in July. So just be careful with these. We could see some big extensions on these as well. I don't necessarily think we're going to do it this week because it's Thursday and it's highly unlikely to get to 200 weekly range, is it? Unless this thing does really collapse. But so just got into the Euro CAD as well. Target back up to ADR. So I'm just going to look to get out on a propulsion gap fill on that low. And then it can carry on going that way if it wants to, but we'll see. Euro Swiss, same thing, massive extension down into the previous day's low at 150 ADR. So all these good opportunities for V-shaped recoveries. Yeah, same as that. Yeah, we do this a lot, V-shaped recoveries at the moment because the market really does not know which way it wants to go. So Euro Pound ADR, that's already played out. You've missed that one. Already gone off of ADR. There's your reverse alert. That's off on its way. Straight off of ADR. Euro yen. Again, be careful with these yens. All we've done is go down to the bottom of the range. We could just trade straight back up to the top of it. And Euro New Zealand is an ADR as well. So all those euros, just be careful with those. Same with these pounds as well. Pound odd has dropped off the back of the Euro news. So no reason why this should be this week. And we shouldn't have this strength coming through in the Australian dollar either. And the pound CAD, that's really tanking. So pound CAD, I'm just about to get into this one today. Next reversal alert, I'll be long on this one. We're extended on the hourly RSI. So 5 minute, I will be taking the next reversal alert on this, which is going to be there. So as soon as that breaks, I'll be back in that long. That's extended to 125 ADR. And then we've got pound New Zealand and pound US dollar. Pound US dollar I'm already in. So just waiting for another entry on that one. And the pound New Zealand. That's just come off of ADR. You just had the reverse alert on it, literally last candle. I thought that's a doji. That was actually a bullish doji. I thought it was going to be that candle that gave it, but it gave the signal there. And then US dollar Swiss. US dollar rallied off the news, hit ADR and came back down again. Let me just check this CAD Swiss. I just want to see if the EA has triggered it. Okay. Yes, I'm already in it. So yeah, already in the CAD Swiss. So yeah, I don't know if you would have got in on the first entry on that because the EA took it quite a while ago. We got 4 positions on that. Let's just see what the other set files have done. That's mine. Hedging, taking a little bit of drawdown control today, still 14% up. And H4 taking some drawdown control today as well, 1.57. But that's actually got into some positions now. So we've actually got, there goes another trade just literally gone on as we're speaking on the pound CAD. Oh, sorry, it's just closed out. A drawdown control on the pound CAD, sorry. So yeah, so we're actually in some trades now on the H4 M15 strategy because we haven't had a lot this week. Or this last 6 months, really. 6 weeks, rather. So RSI extensions. Let me just catch up with the chat before I do those. Paolo, forget a prop firm. Start an eye makeup company. Greg Secker will never stop paying you. I think there's too much competition for eye makeup. I'd like to find out what brand he uses. Lee Elliott, Swiss yen. It's not extended. Yeah, Swiss yen doing anything, is it really? I don't know. It's not doing anything. There's no signals anywhere. So, are you trading all pairs? Yeah. I've been trying my hardest to figure out the weakness of the hedging indices scalping system. I can't find it. Maybe when you try to exit the hedge with position trading, you might take quite a big loss. Yeah, well, that's why I'm running all these system parameter permutation tests. All of the tests I've done, as you can see, have got a fair bit of drawdown. Yeah, so 20 to 30% drawdown on account. Run up is obviously way more. So it's one of those strategies where you're going to get sustained periods of loss, but the loss is always limited, which is different to the opening range breakout EA, because the opening range breakout EA, you can set a loss limit. So you limit your own losses, and you can have the opening range breakout EA keep trying to get that break. Whereas this, we just say, right, if we don't get the break, we stop and wait, and then we try and get out of it later. So you're going to have periods. Some of the testing that I've just been doing on here, you'll see that you have days where it just suddenly takes $500 loss, $500 loss, $500 loss, $500 loss, because they are rotation days, and you get multiple rotations in a row. Those are the days where I think you're going to suffer from the drawdown. But super big drawdown, obviously, as well, you will find you get the odd day like that, which is what I need to do this backtesting for, so I can identify what the problems are with the strategy, so that I can figure out how best to get out of them. I've already got some ideas built into this to get out of them, which are ready to test. So that one, for example, we're hedged. So now we're looking for a big move. If we don't get the big move, i.e. we just stay in rotation for the whole session, there's nothing you can do about it. It's a loss. But it's no different to getting stopped out, is it? But what we're doing is we are limiting ourselves to not overtrade in these conditions. That's the big difference between the opening range breakout EA and strategy and scalping in general and hedging. It stops you from getting yourself into more trouble. Yeah. So we wait and see. Do we get a move today? Yes, we do. Right. So in this particular instance, and this is the test I'm running right now, is to combat this particular thing. This test here closes out at session exit, which is what you've just seen. This test here closes out at end of day. The reason I'm interested in these two results is quite often this is the start of the New York session. The New York session will often reverse or pull back on what we had during the Frankfurt session. So in this case, this might continue to rally down. Nothing you can do about it. But if it does pull back, which it didn't in that case, that would have given us an exit. Yeah. So I'm testing all these different scenarios, basically. So there you go. That one's hedged. Again, made a loss because we did not get a decent move. Just trying to find one that does. There we go. So we're hedged on this one. Again, no movement, nothing you can do. You can't make money if the market isn't going anywhere. It's a sideways rotational session. See what I mean? So this is what, 3-4 days in a trot, you've lost money. But couple this with the US indices having breaks in the afternoon, and all of a sudden this loss gets outweighed by the NASDAQ rally, the Dow rally, whatever rally, yeah? So look at my results today. DAX, nice $3,000 win this morning. Dow, nice $3,000 win this afternoon. S&P, I am actually hedged on it, and if I hadn't been dual running the EA, this would have been hedged on it. So I'm stuck in a hedge at the moment. I would have been stuck in a hedge at something like $2,000. So I've made 6, lost 2, made 4 on the day net. So even though you'll find that there will be a long losing run on rotational weeks and days within one instrument, not all instruments will go rotation at the same time. The DAX and the Dow and the NASDAQ won't all have rotation days. We can see that. We got hedged on the S&P today. We didn't get hedged on the Dow. So the Dow has made, whatever the Dow's made, $3,000. That pays for the S&P. Job done. We made money today, haven't we? Regardless if we traded the DAX this morning or not. So this is why I'm doing all this testing, to find out what the another hedge there as well. Look. What the potential pitfalls are that we can get out of. Right. So this one, look, we're in loss recovery mode now. Loss recovery target is $400. So we've banked 2K. All I'm looking for is a pullback off of this second position. Yeah, by the end of session, which we don't get. So we take a loss. So we actually take a $2,700 loss on this one because we didn't get that pullback. But watch what happens now in New York. Let's see if we get the pullback in New York. Not today. So today's a trend day. If you were trading the original opening range breakout EA, that would have been a killer day. You'd have made an absolute fortune on it. But see what I mean? There's no right or wrong. There's no win or lose. There's just different. This is a totally different strategy to the opening range breakout strategy in the fact that it makes money in a totally different way. That one was a nice quick in-out win. Hedged. Made it to target. Now we're getting into a second sell. Exited second sell. Net profit $300. So these are the days where we get hedged. We make the money on the long. We scale in to the short, to exit the short, get out of the day with a profit. Not a big profit, it's a profit. And you can set, obviously, what this is. And again, I'm testing this, different variations on how far can we go, sort of thing. So there's a lot of testing to be done. But as I said, 70% of the system parameter permutation tests are profitable at the moment. But then again, I haven't tested everything. So again, hedge there. See, and this as well is what I'm testing. R returns. I'm testing between a 2R and a 5R because anything above 5R, really, you get into ADR, which case, you know, you don't often go much further than ADR. The system tests that I've done actually show that going for a 5R is too far. The vast majority of days, if you get hedged, that 2R is 2 to 3R is the better spot to be reversing at, because after that initial rally, so when you get hedged, after the initial direction, it actually decides to go somewhere. It then tends to pull back before the next leg. So if you just target 2 to 3R, you'll normally get a pullback before it goes off on its next leg if it's going to be a trend day. So today's kind of a prime example if you look at the Dow. So if we'd have got hedged there, for example, if we've whipsawed high and then broken to the downside, we've broken to the downside, hit 2R, pulled back, starting next leg. So what you do is you take the profit there, exit your longs there, and close out in profit for the day. So my testing, if you look at my results on that initial back test, the targets, actually, those are the 2s and 5s, aren't they? Yeah, these are the outliers. So when you look at the non-outliers, which is kind of going to be from around about 2 down, you're looking at, oh no, actually, saying that, no, yeah, there you go. There's where the bulk's coming in. So the 2s and 3s, so 2Rs and 3Rs are, I did do a filter on this earlier to see how many there were, and there is a majority. So 2R and 3R is actually a better place to get out if you get hedged and then try and take your reversal, because built into the system is an automatic entry at ADR, which takes 3 positions. So it position trades up to ADR and then gets you out at ADR. But this is all being tested. So, you know, at the minute, I'm still working on it. And trying to find the optimals, which I don't think there is, to be honest. You know, eyeballing it is a much better way of doing it. If the yen goes up, does that mean the dollar goes down? No. They do. They are correlated because quite often when you get movement out of the US dollar, people tend to want to put it into the Swiss franc or the yen to hold on to it while they're waiting to decide when to get back into the US dollar. So they are correlated negatively a lot of the time. But because a US dollar move happens doesn't necessarily mean a yen move happens. Yeah. If you look at the US dollar at the moment, not going anywhere. The Swiss franc is going down, that's why that one's going up. But the yen pairs are independently moving at the moment. Yeah, CAD yen. So if you look at the US dollar yen, that's a good gauge on what the strength of the yen and US dollar is. There isn't any. It's not going anywhere, is it? It's totally sideways. So. Right, so look at these ADRs. So, sorry, RSIs. So I've just got into EuroOdd. So H1 RSI extension. First entry, M5 reversal alert, looking for a pushback up. I'm just looking for a push up into that propulsion gap at the moment. Euro CAD, just entered that one, looking for a push back up into those highs. So that's yesterday's high, previous day's high, propulsion gap fill. That's my initial target. The CAD, pound CAD, that's extended beyond. Haven't got an alert on that one yet. We're just coming down to a line I've drawn. What's that line? So this was previous support resistance I identified. So what we were looking at was what happens if we break this monthly low from here. And I said this is where we're likely to find some kind of support because this is a previous area of resistance. Yeah, we tapped into multiple times. We broke it. We used it as support. Then we hovered around a bit, hit it again, then we bounced. So we know that the price has had decent reaction at this level before, and it's just above a propulsion gap where the buying started at this point. So where we are right now is potentially a nice pullback zone as well. So there's nice confluence there, RSI extension to the downside like that. So we'll be looking for that kind of pullback on this move. So this actual thing that we're seeing here, if you look at where we are dropping from, there hasn't really been a pullback on this of any kind since we started the move here. So from there, we pulled back. We then started to push down and accumulated. So I'd say that's where the break started, that propulsion move there. So from that high there, we haven't really pulled back. We've pushed and accumulated, and are pushing. So I would say that this is the leg that we're on at the moment there. So looking for a pullback on this, anything up to 38.50, somewhere around here, which is in these propulsion gaps. That support potentially will come resistance if we're going to continue down pound CAD. Obviously, if we're not, we're coming all the way back up into that propulsion gap. We're going to come and retest this area here. So yeah, nice little bounce point there. Haven't had a reverse alert yet, so just waiting on M5 for a reverse alert to kick in. That'll be the entry. It's holding very nice on that support at the moment. Doesn't mean it's going to, but it is right now. So that's pound CAD. The other extensions we've got, which are not extended beyond 25.75, are the CAD Swiss. So that's hovering up there at the moment. If this can get another leg up today, I'll get a short entry on this CAD Swiss as well. Been rallying now for a week, and we came out of a sort of week and a half accumulation. So very orderly grind. Canadian dollar rallying off of oil, obviously, at the moment. Swiss franc is now going to have a little bit of a weakness based off of the euro drop. If the euro drop happens, we still don't know if this euro drop is going to happen. We need to see if this move that we've had today gets continued. If it just recovers, we'll probably find some Swiss franc strength coming back through. So that is extended to the upside. 5-minute reversal alert was already triggered on that. So you can't really ignore that wick, but that is just a new spike. So I would say this is still market structure going up at the moment. We could potentially get more upside in this one. Euro yen extended to the downside. Nice bounce coming off of 125 ADR. You haven't had a reversal alert on this one yet. It's only just extended on the hourly, but if you look at it and where we are, that is the most recent support. We've got this level here, which we've tapped into multiple times. So this whole area down here, we keep buying from. So anywhere down here potentially is a good buy spot. The US dollar is not rallying, so there's no reason for that yen intervention. So we'll see what happens, but nothing much moving on that at the moment. But nice looking long opportunity. All these euros are Euro New Zealand and Euro US dollar, both RSI extensions. That one's already pulled back off of ADR. Again, reversal alert has just triggered on that. So market structure potentially doing that, or that's your first leg retest and pop from there out of that propulsion gap, moving up anywhere really that can go. New Zealand dollar, we haven't got any news coming on the New Zealand, I don't think. GDP next week, but there's no major news on the New Zealand next week. So I suspect the New Zealand will stay weak with the Australian dollar at the moment. So if this euro move is not a move, obviously that should have no problem getting all the way back up. But we will find out. Pound odd extended. We've already looked at this one. This is an RSI extension today. It's also extended on the hourly. Not quite to the 25 level where I want it. We are broken out now. So next stop is that monthly low. There's a lot of lows here. Yeah. So this level here is a lot stronger. Yeah. So we've bounced off of that multiple times. Yeah. We've got this little level there out of that propulsion gap, which is a retest to start that market structure leg up. So there's a long way to drop down to these levels. There's not really any reason we will bounce from here. Yeah, we will bounce potentially from here, but there's nothing much here at all. So it's a bit of a tricky one to take along on this one, but it is an extension, and after they extend, they profit take. So if you're going to trade it on the 5-minute time frame, you want a nice tight reversal on it. It's going to be quite big that by the time it triggers. So don't get greedy. Pull back up into there. They might use that wick. They already have. Look. So not a great reversal, that, to be honest. It's kind of hovering in the middle of nowhere, isn't it, at the moment? Pound odd and pound CAD we've already covered. There's a few 4-hour RSI extensions. We went through these ones this morning. The main one that's shifted is the CAD Swiss. So the CAD Swiss is now extended above the 75 level on RSI. We looked at this one this morning because it had broken out of that level. It's still going, or had it already broken out? Because yeah, we looked at it, didn't we? And I said, watch that accumulation there. So that is this level here, which is, yeah, that's right. I remember saying it now. I said, look at 150 ADR on this. If we break out of this high, that's where we're probably going to find we do a pullback. Or was it in this session? I can't remember. I say the same thing over and over again, don't I? But potentially that entire move, we haven't had a profit take on it yet, have we? So by the time we get up to there, we're nicely extended. We're looking for a pullback on that, 38 to 50%. Canadian dollar, however, strong. Swiss now potentially weak. But we will see. We need to wait for the market to settle down and decide what it's going to do with this euro, whether or not it likes it or doesn't like it. Indices haven't got a clue what they're doing today. So I'm out of the S&P at these lows. It's putting back up nicely. So I'm just going to close the long out. I'm just going to wait actually because it is still rallying. So I'm just going to wait to close this long out and that'll exit me in profit. I'm just going to hold that for a minute. I'm just watching the DAX at these highs. It's looking like it wants to rally now long. Real rotation day to day. So I'm just going to see if we can break that high on the S&P and that high on the DAX. There's potential for this to pop. Let's just quickly look at the US dollar and see if that's coming down. Yeah, US dollar's coming down as well at the moment. So reversal alert just taken there on the euro US dollar. So that's the second entry off of that one taken by the EA. So again, I'm just going to move my EP up to there. That gives me a fairly decent profit on this now, if that does rally. So US dollar weakness coming through. Euro US dollar is running. Pound US dollar will be running as well. Which obviously, if the US dollar is rallying, we tend to see the indices coming down. But nothing is making sense in these markets at the minute. Right. Riding the NASDAQ up. Good man, Brian. Tricky, that. Bit of a mess here. That level, if we'd got down to there, that would have been a beautiful little long, but a bit hard to take a long off of that because it was just a bit of a mess there, but it's worked out. Still trying to rally. This looks like the big break for Euro New Zealand on the weekly. Don't do weekly charts, but could be. But when tomorrow we've pulled all the way back up into there and undone the news move, that will look very, very different because you'll have a spinning top there. It'll look like a reversal pattern to continue that move. Wait for the week. If you're going to trade the weekly charts, you need to wait for the weekly candles to close. Yes, certainly broken out. The big question is this move from the euro a move, or is this the market knee-jerk overreaction? And when they've got the analysis done, actually looking at it, thinking this is no different to the pound and the US dollar. We haven't got a clue. And they will just undo this and then we'll just sit exactly as we have been, doing absolutely nothing. No directional bias at the minute on anything. We're waiting for something to kick in. This is the first day we've had our RSI extensions to look at for 6 weeks. No, really? Can you remember another time we've had a 75-25 RSI? If we look at my P&L on here, if I sort it by, can't really tell new trades taken really. So last trade was euro US dollar. But yeah, I mean, if you look at it, I haven't really taken any trades on this. 1st of September, 5th of September, 8th, 7th. These are individual add-on positions. We haven't had any extensions, have we, to get into anything? It's just shocking. It's nice to see some color on the dashboards finally. 150 euro CAD still coming down. Euro US dollar not. This is Canadian dollar strength. Pound CAD will be dropping as well. Aussie CAD, everything will be dropping against the CAD by the looks of things. Move down there. US dollar CAD down. So this is Canadian dollar strength. Oil's popping. Yeah. If you want confirmation of the relationship between oil and the Canadian dollar, there it is. Right, closing S&P. I am flat. So out of the S&P hedge, we are up in this high. Sellers starting to step in. What I'm not wanting to see, basically what we've had on the Dow. Yeah, so I'm just going to get out of it there. That exits net win on the day. 37. %. Yeah, good day. It's a bit unsettling taking manual positions knowing the EA isn't taking care of drawdown and future position sizes for me. Would you consider an update to the EA when it takes manual positions into account? No. It's not designed to do that. If you don't want to do it, don't take manual positions. But what I would say is your job, as I keep saying in here, is to look at this. Yeah. If you take a manual position, it's up to you to manage that manual position by looking at this. Yeah. When this starts to get a little bit too hairy, look at it, analyze it, look at what it's doing. Look at the pound US dollar at the moment. Why is it in so much drawdown? Because I accidentally took 2 trades here. One of them's manual, one of them isn't. The EA is managing this one for me. Yeah. So it's managing the positions for me that I've taken myself. That it's taken. I'm managing the positions that I've taken. You're not going to do it very often. There's not going to be many instances where you're going to need to get into trades manually. Most of those are going to be aggressive drawdown control positions, aren't they? So, but you know, this will tell you if there's stuff that you need to do. This is your guide. Yeah. If you look at this and there's something that's uncomfortable, do something about it. If you take a manual trades, you're doing exactly the same thing. You're not looking at your charts. You're not looking at your trades. You're looking at your trade manager dashboard going, what do I need to deal with? At the moment, there's nothing of concern at all, apart from this pound US dollar, which at the moment isn't very concerning because it's come off of 125 ADR and put in a beautiful reversal pattern. So your S&P's just gone into positive just because I closed it. So we're above the long. That would have been a lovely trade today. That was my short entry. That's where I exited my shorts. And straight out of the longs, that would have been a beautiful $1,500 profit, which is really annoying, but my fault. I need to get the EA updated on the VPS. Just open up the VPS just to remind me to do that. Don't forget to upload it. Out of NASDAQ, good job, Brian. Does the symmetrical triangles still work? Yep. I didn't make up symmetrical triangles, Paolo. They've been around since Elliott. Yeah. Symmetrical triangles, Elliott wave, all that sort of stuff. It's been around for decades. I didn't make symmetrical triangles up. They are a chart pattern. That's all. It's a chart pattern I used to trade with a stop. They still work and they still fail. Everything with a stop loss fails and works. Nothing wrong with symmetrical triangle patterns. I see them all the time. I point them out in here all the time when I see them, when they form. I pointed one out this morning on the DAX. wherever it was. It's in there, wasn't it? That failed. So it's break to the downside and it went up. That was a failed symmetrical triangle break. This is what I've said many times in here before. Elliott wave patterns, like Gartley's and Gann, everything you see with that is a pattern on a chart, you will easily spot all the ones that play out. When you actually go through your chart and you look in detail, you will see hundreds more that have failed. You can't see the ones that have failed because they're not complete. You train your eyes to see kind of a pattern that looks like that. Gartley. You will spot Gartleys everywhere. You won't have trained your eyes to see this pattern. Failed Gartley. You would have been signaled at this point. We've got a Gartley underway. You need to trade it long now up to there. Yeah. But you won't spot that on your charts because the Gartley turned into an accumulation. Yeah. Same with the head and shoulders pattern. Everyone could spot a head and shoulders pattern. Piece of piss. See how many head and shoulders patterns that have failed that you spot. What are they? Failed head and shoulders pattern. Just a continuation in market structure, but it's a double bottom bounce. Yeah, but you won't spot these because that didn't happen. But these are way, way, way more prevalent on your charts than head and shoulders. Symmetrical triangle patterns are everywhere. You see the ones that break so easily. The ones that don't break and turn into long accumulations, you won't spot them. Chart patterns. They're as good as everything else in trading. Stop loss. Don't get me wrong, I love them. Symmetrical triangle patterns, when they break, can make you so much money. You've just got to be very disciplined and hold those longs. You'll easily get 7-10 hours out of symmetrical triangle pattern breaks. It's whether or not you can hold them. That's the thing. This is what everybody struggles with in trading. You struggle by putting your stops too close or moving your stops, and you struggle as soon as you get a trade going to profit, you take it off because you're in profit and you think, oh my God, I've got to get that loss paid for. That's your first thought. Got to get that loss paid for. So you don't hold the 10R. There's nothing wrong with symmetrical triangle patterns. They work beautifully and they make an awful lot of money. But very few people can hold on to the trade. That's the problem. And with all patterns in general, every trading strategy in general, holding your trades. Look at 24 bounce. What's been trending? I know what's been trending. We know what's been trending. That's not a really good one, is it? What's been trending better on the yen? CAD. Pound, probably, isn't it? Because that's been stronger. We know that in a trend, the market bounces off the 24.72 moving averages on the daily chart. Yeah. So you take that bounce and it moves up to there and you go, oh, I'm worried about that high. So you get out there. You could have got out here, but you didn't hold it. Why? Because you can't. Everything, every strategy you learn looks great on paper. And they all go, look at this. This is the best strategy. There's a really good one. The guys at CTI have the bank level strategy. They post loads of charts. Look at this massive 15-to-1 risk-reward ratio trade we had, which worked out over 6 days. Everybody got out of it after 3 or 4 hours. No one held it for 6 days. No one. But the strategy they teaches you that's how it works, and you go and trade it, and then all of a sudden you get 3R in it. You've lost 2 before, you've got 1R return, and you go, got that loss back, and then it collapses 7R, and you go, Christ, I missed it. So what you do is at 5R, you chase it, and then it bounces back and stops you out again. Sound familiar? That's what the position trading bootcamp teaches you not to do. Happens with everything, doesn't it? Since the EA took a long on EU, how are you managing the manual you took earlier? I'm just going to watch it. So I've got a trade there. I'm going to get out here. Nothing's changed, yeah? Whether I take a trade or don't take a trade, what's my trade idea? What was my trade idea before the EA took this trade? My trade idea was for this move to be reversed. What's changed? Nothing. That's my trade idea. I'm looking for this move to get in a V-shaped recovery in the next 24 hours. If that doesn't play out, and this goes into an accumulation drop, I've got two positions too close together. Right? So when it drops down to here, what's my position? I don't know. What I will do is I will look at this, and when I become uncomfortable with my drawdown, I will start to deal with the trade. At the moment, this thing could go down to here, up to here, down to there, take another entry long, push up to there, come down to here, and then come up and hit my target. Yeah. I'm not going to do anything until this is sitting in 2% of drawdown, because until it's sitting in 2% of drawdown, I'm just in a trade. The idea is I'm going to get this propulsion gap filled. Yeah. Whether I've taken a manual trade, the EA's taken a trade, what's happened is irrelevant. What is relevant is what is my current portfolio position. Don't worry about it. It's tiny. If this thing goes all the way down to here, what's the worst case scenario on that? I might be maybe 0.75 to 1% in drawdown on my account. That's it. This is why we position trade with small positions. If it is a worry, yeah, you're too over leveraged. If you put a trade on and you think, as soon as you put the trade on, you're worried about a next candle being bearish, you are massively over leveraged. You should be able to put a trade in the market, walk away and go on a holiday for a week and not give a monkeys. If you don't, you're over leveraged. On position trading, obviously when you're trading on low time frames where you're looking to get in and out within X amount of days or X amount of hours rather, yeah, over leveraged is okay. But the same thing, if I'm trading the indices, yeah, if I short this here and it moves up, I can't actually see it, so let's open up. Right, if I short this here, and by the time it gets there, I'm crapping myself in 3% of drawdown, I am way too over leveraged. Yeah, if I short it here and it gets up to ADR, I should have an opportunity to take another entry at ADR, because I know that ADR, there's a highly probable chance that it's going to start running out of steam and pull back. So I should be able to give myself a chance to get out of that trade. Or if I'm going to get into it here, I should be able to put a stop loss somewhere up there, which isn't going to kill me. And if it hits it, I go, meh. Yeah, this is part of the problem. It's one of the things that one of my mentors taught me. It was Canal, actually, Canal Desai. If you hit that button and you're immediately worried when the first candle after you hit that button goes the wrong way, you're massively over leveraged, because you shouldn't worry about it. What's this thing do all the time? That. Yeah. Look at what it's done through the Globex session. None of that should worry you. Shouldn't bat an eyelid. Yeah. The people that are papping themselves are the guys that are seeing that candle, a bearish engulfing, and going short with a stop loss there that loses them 4% of their account. If it moves up to there, you've got 2% of drawdown. Of course you're going to be papping your pants. Too much. If you get it wrong like that 4 times, you've lost 10% of your account or more. Yeah? That's just pure gambling, isn't it? So, this is why I'm not worried about it, the euro US dollar, because it's the first entry there. And then this is my second entry on it. Now I've got 3 on it. This is too close together. Yeah, that is a quarter of an ADR. Too close together. So if this decides now to put that reversal in, retest it and push up to there, I've also got the opportunity to just shut that out and go, I'll get it off. Your choice. Take it off. If you're unhappy, when it gets up there, take it off. Or when this one gets up to there, take that one off. The EA will put it on again if the market reverses. So you can just take them off. But if it's worrying you, you've got too much on, that's all. And yeah, it might get me into a little bit more trouble, but it's going to get me into maybe 1/4 to 0.5% more trouble, isn't it? You make trading seem effortless. It is effortless if you don't over leverage, isn't it? Really, if you don't go mental, it is effortless. Everybody's trying. This is you know. I keep going back to the boot camp, but this slide on the boot camp, I pull this up every month because it is the most important slide. It's actually usually stopped at that slide, but I was flicking through the other day. This slide is the most important slide, and as far as I'm concerned, in the whole boot camp, because this is the problem with every single trader. Yeah, every single trader has all of these problems, or most 80%, 70%. You got these problems. You've had them. You've done something different to get over them, but it's presented more. These are all fixed by not getting in too tight and putting your stops miles away. Yeah, so if you're using a stop loss based strategy and you're trying to pick the top of or the bottom of a range, the reason you get stopped out all the time is because you hit a resistance level, it goes down, and you put your stop there. Support and resistance zones are like that. It's not a line. It's an area on the chart, which we can identify the last turning point, but the next turning point won't be the same. So put your stop there, which means what have you got to do? Reduce the size of your position. That then becomes effortless when it does that for 3 days, and then it does that. You become a winner, but not because you've done anything, but reduce the size of the position. If you position trade, obviously, we don't use stops at all, so it becomes even more effortless. But all of these things that everybody has a problem with are caused because you get stopped out on trades, either because they're too tight, because you've got to have that massive leverage on because you need the Lamborghini, or because your stop is too tight, as I say, or you've got, yeah, that's it, isn't it? Basically, your stop's too tight and over leveraged. But if you were to remove that and put the stop 4 times away, you will win more trades. You won't get the risk reward ratio of 4 to 1, but you don't need it. If you can be right more than 50% of the time because you don't get stopped out, a 1 to 1 risk reward ratio makes you money with a 60% strike rate. Just give it room to breathe. At the moment, we're looking at the euro US dollar massively extended, needing a pullback, and it's breathing. And it could breathe for days and then decide to move. But I don't care. I'll wait, because I don't know which way this is going. No one does at the moment. This move may be the start of the next big down leg on the euro. It may be a complete overreaction and completely undone. I haven't got a clue. But right now, it doesn't affect me because I'm in 0.27% of drawdown and I couldn't give a monkey's whether it goes up or down. I'll deal with it later. But, you know, overnight, I could wake up tomorrow morning and it's up here. And that, whatever it may be, is just down here. Find out tomorrow, won't we? We're just testing the highs on the S&P. Pre-market high. We've broken the pre-market high on the NASDAQ. We're retesting on the Dow. So if we are going to get a rotation, this is probably where you want to start looking for your shorts. Look at the NASDAQ. Quick rejection. Limit orders. At what? Propulsion. See what happens next, but starting to find a little bit of weakness creeping in at these highs. Is there any way I can help with the testing process of the index hedging system? No, not really. I need to do my own testing. If you did a load of testing, I wouldn't trust it. So nothing against you, but I wouldn't. I need to do my testing. I test my own stuff. I think everybody should. Yeah, if any product I put out in the market, do your own testing on it. Yeah, I would test everything. I never put out anything without testing it as thoroughly as I can. You can't test it every scenario. I need enough faith in a product to find an edge. If you out of sample test stuff, you're never going to get the same results again. So if you do an out of sample test and it gives you a break even or a slight loss, and every other test you've done gives you a win, that's an anomaly. I don't auto trade 100%. As you know, I auto trade 90% and I watch what's going on. So I need to backtest and watch. So, I'm going through all of the tests and looking at every test. I'm looking at what happened on every test. I'm analyzing everything to do with it. So I'm looking at all the data that is being generated by the EA is giving me information. Yeah, so I'm looking at the days, did we get hedged? So that day we didn't get hedged, easy. That day we didn't get hedged, easy. That day we did get hedged and needed a loss recovery, we won. That day we did get hedged and needed a loss recovery, we won. That day we did get hedged, did a loss recovery and made a loss. I need to go and look at that day. The 6th of July. What happened on the 6th of July? Well, so is there a way on the 6th of July we could have got out of that trade? No, nothing you can do about it. So we are going to accept losses of up to X. So, this is the sort of testing that I need to do, is identify, and this is what I do. All this data comes out and I go through the data line by line, day by day. And it's the same principle as I have with position trading. All of these days, couldn't give a monkeys. Yeah, because they're all winners, right? The strategy works on all of these days. Strategy development is about identifying the lost days and eliminating or reducing the losses. Because if you can eliminate and reduce the losses, the profit becomes higher. You don't need to worry about what works. What works, works. If you try and improve what works, you'll create more losses. So you just let the working stuff play out and concentrate on where it didn't go wrong. If we get an average day here is about $500 or $600. If we have an average losing day of $400 or $500, that's just a standard hedge. 4 positions, 2 longs, 2 shorts. We just went into rotation. Can't do anything about it. Yeah. So I need to focus on this. And this is what I said yesterday when I was looking for the Achilles heel in a strategy. I'm looking at this sort of thing. What are the outlying losers? Why are the outlying losers occurring? What can we do about these outlying losers? What rules can we put in place when we have these days to try and combat it? This one, obviously, as you can see, there's absolutely bugger all you can do about it. If you hadn't have got hedged long, literally one tick, look at it. That's the break that we took. That is the high. 2 ticks is the difference between a $2.5 grand loss and probably a $900 win. 2 ticks. What can we do about that 2 ticks? Nothing. You could say, oh, well, I won't take it if it's 329. I'll make sure it's got to be 350. That means I wouldn't have got into that one. So what happens when you get the 352 that does the same thing? See what I mean? You cannot eliminate all loss. You are going to take losses. You're going to take hits. There's nothing you can do about it. But what we're looking for is the overall edge in the strategy, producing 70% of the time results, regardless of whether you got in with a TP1, 2, 3, 4, or 5, whether you took 2 positions, 4 positions, 6 positions, whether you use 0.5%, 1%, or a fixed lot. All of these scenarios work and become profitable. That's what backtesting is about. It's got to be detailed and thorough to identify an edge. If there is no edge, scrap it and move on. But you've got to be able to see what's going on and identify it. If you don't do that, where's my folder gone? Shut it down. If you don't do that, then there's no way you can have faith in a strategy. Yeah. Did we hit ADR? Look. Did we hit ADR high? Yes. And we made money. Did we hit ADR low? Yes. And we lost money. Right. So when we hit ADR, we need some kind of mechanism at ADR potentially. Yeah. This is all the stuff I'm looking at to try and fine tune to make things work as effectively as they possibly can. But at the end of the day, you are the trader. You're the human being in charge of the machine, and it's your money. So you've got to be able to read this market as well and identify when to get in and out of things. This trade here today, I manually exited there and I manually exited there to get myself out of that hedge. The EA could have been set up to do that, but that probably wouldn't have been profitable long term. I don't know. I'd have to see what that scenario was. But see what I mean? So if I give people testing to do, I'm still going to get it all back and go through that process, because as much as I love everybody, I can only trust my own results at the end of the day, and so should you. Mike Tyson, everything has a plan until they get punched in the face. Exactly. Best laid plans. But look at this now, my P&L. I don't know how long this is now, but I haven't had a losing day now. If I win tomorrow, it'll be 2 weeks solid. This strategy hasn't had a losing day. This month, so far, is this month so far? 25k, up 25k. Yeah, so it's a very robust strategy. More robust than the opening range breakout strategy. I think you'll find, I haven't done an E analysis yet, but I think you'll find the profit curve on this will be more like that. Whereas with the opening range breakout strategy, we have a lot of stagnation. And this is why I built this EA, to try and identify where that stagnation lied and how we can get out of it. And I think I may have found it, but we'll see. What do you have your risk on at the moment with the H1M5? 0.1, because it's trading all instruments. .05 on 5,000 account. Okay, I'm under no stress when I trade. Yeah, 0.05 on a 5,000 account is a decent. If you haven't got the market reversal alerts EA, it's a good guide. 0.01 per 1,000 or 2,000 on your account is a good level to start at. Yeah, 0.05s, Jimmy, on a 5k or a decent level. And, you know, you have to feel your way through it. If you think I'm not quite making enough here, percentage gain wise, up it a bit. But by a 0.1, just go in tiny increments until you get where you want to. But if you've got the market reversal alerts EA, it does all the calculation for you, so you don't need to worry. That's why I built the market reversal alerts EA, just to simplify it. Because it's painful trading. There's a lot of manual stuff you've got to do. So you want to automate as much of your life as you possibly can. Brian, you're in a short scalp on the DAX, on the NASDAQ. Oops. When did you post that? I can't see a time, but I'm assuming it was here. It's broken. The Dow hasn't, though. And the S&P's just about made it out the top. So, newbie question, Paolo. How does one learn to read Forex news, learning which direction the market will take from recent price figures, the different types of news that gets published? You kind of want to do a course on fundamentals. Unfortunately, there's not many out there. You'll find a lot of traders use the terminology fundamentals because most traders are looking for a mechanical system using technical analysis to make money. But what they don't realize is that the market moves. Well, they do know the market moves on news. Everybody knows the market moves on news, whether you like it or not. But there's not many courses out there that teach you how to trade fundamentals or how to read fundamentals. The best thing I would say is go to OpenAI and ask OpenAI all the questions you have about fundamentals. Yeah, so if you go into ChatGPT and ask it the question, I think we did this in here before, didn't we? But if you just ask, you know, how does CPI affect the Forex market? This will tell you all of the fundamentals. So it's a good course in itself in the fact that it explains what the fundamentals are and how they affect things. So, and it tells you what the knock-on effects are. So CPI going up makes inflation go up. Inflation going up, which is CPI, makes interest rates go up. Interest rates make unemployment go up and cause GDP to drop. Interest rates going up cause housing markets to boom and then pop, causing housing bubbles. So there's all sorts of stuff that affects everything. But the fundamental drivers for the market are interest rates, inflation, GDP, and unemployment. COT positioning, which is the commitment of traders on the financial futures markets, gives you an idea of the direction that they are currently driving. Yeah, so that's gold. That's a bad example. But the Aussie dollar, for example, 71% of market participants in the futures are short on the Aussie dollar at the moment. Yeah. You can tell that it's in a downtrend. So there's the certain, and the reason it's going in a downtrend is because they've preempted the fundamentals. So your job is to try and read not what is coming out in the news, but what impact that has on future movement. So we've been watching for ages for these interest rates to hit terminal rate, because until they hit terminal rate, that currency should become stronger and keep becoming stronger. The problem is when every currency at the moment is having high inflation and putting interest rates up, everybody's in the same boat. So there's no bias on Forex because everybody has to put interest rates up. Everybody's stuffed. Everything's going wrong for everybody in the same way at the same time. So fundamentals at the moment don't have an awful lot of impact. As we've seen today, CPI figures going up always has a positive effect. US dollar, CPI figures, what happened? Boom, collapsed. Right? Interest rates going up always in the past has a positive effect. Interest rate on the euro gone up today. Boom. And not just gone up unexpectedly. We weren't expecting it to go up. The market hadn't priced in an increase, yet it collapsed. So you kind of got to take fundamentals with a bit of a pinch of salt at the moment. If you want to do a good course on it, it's going to cost you. You need to go to Anton Creel. His course is a couple of grand, but he is the godfather of fundamentals. He used to be a financial analyst for Barclays. Don't quote me on that. One of the banks. I think he worked for an investment bank. I can't remember who it was. I thought it was Barclays. Might not be. But he knows fundamental scorecarding more than anybody. And he's got a very detailed course. But other than that, you've got to piece it together yourself. At the end of the day, if you want to know what the markets are making of it, if you go onto the website and go to the commitment of traders section on the website, this gives you the current COT positioning. So this is the what's called the non-commercial positioning on the futures market. So banks and institutions will have a bias on a currency. There are multiple trading desks within a bank or an institution. This is what we call the non-commercials. So this is non-hedge funds, because hedge funds trade both ways. So we don't want to know what they're doing because they trade both ways. So that doesn't help us. It's the commercial desks, the ones that execute the orders on behalf of commercial clients, which just need a job done. We don't want to know about them because they're just placing orders because they're told to. And there's other desks as well, which we don't want to get involved in, the speculative desks. The non-speculative desks. So this shows you what the speculators are doing within banks. These are the guys that are taking positions to hold for 1 to 3 months with the game of making money. So if they are long or short on a currency, they are assuming within the next 4 to 12 weeks, we will get a downtick. Doesn't tell you when, doesn't tell you how big. It's just what their assumption is moving forward. So Aussie, as you can see here, 72% of market participants are short Australian dollar. You look at the Australian dollar pairs, coming down. Yeah, the market is short. You'll have instances where it goes sideways. Yeah, nice contraction going on there. Symmetrical triangle, long-term one. Aussie, New Zealand. So if you look at the COT data for the Aussie, New Zealand, yeah, they are short the Aussie dollar. They are short the New Zealand dollar. What is a short and a short? A range. A long and a long is a range because there's no bias. If they are short on both of those currencies, they can't both go short, can they? So what do? Go sideways. So it gives you a directional bias as neutral. And this is what goes into the bias scorecard. The bias scorecard shows you the information. So it takes into account what is going on with interest rates at the moment. How have they changed compared to the other currencies? What's going on with inflation? How has that changed? This is what we call the differential. And then COT, how are COT positioned? So on the Swiss yen, let's look at the Aussie New Zealand because that's the example we're looking at. On the Aussie New Zealand, you can see that there's a 0 there. Yeah. Reason being, they're short on the Australian dollar. They're short on the New Zealand dollar. Therefore, they're not long or short bias on that pair. That pair has a neutral bias. Yeah. Retail at the moment, I can tell you, are currently shorting it. So we want to be long because if they're shorting it, typically the market goes in the opposite direction to retail. Why? Because 80% of retail traders get it wrong. We know that. All the brokers tell us on the top of their websites. So if they're all going short, it's probably going to pop a little bit. So if you look at the Aussie New Zealand, pop. Why? Because they're all short. They're wrong. They're always wrong. Yeah. So this gives you an indication as to the core fundamentals. It's not the be all and end all. It gives you a rough bias of what you should ideally be doing. This goes up to 14. Yeah, I think then. So this is a score out of 14. So when you start getting to the 8s, 10s, 12s, you really do not want to be going against this because the market is really, really not in your favor. But when everything is sitting like this, and it has been sitting like this, like ever so slight bias to the upside, ever so slight bias to the downside, whatever, or range bound, what have we been doing for the last 6 weeks? Nothing. Because there's no financial bias either way from fundamental perspective. The market's got no reason to go long. It's got no reason to go short. Doesn't mean it won't, because you will have all sorts of other orders, speculative orders going in. You have all sorts of other things going on behind the scenes, but this should give you a general perspective. And this is all on the website, the fundamentals. You can go and read up about what it all means on my site, and what each of these sections is all about and how it all fits together, basically. But at the end of the day, it gives you a very bird's eye, top-down view on the market. And when we've got normal market conditions, which we haven't had for quite a while because of this interest rate rally that we've had, this means an awful lot more. But really, this year, last 6 months, definitely, we've just been on a nutty run on interest rates. And the market has assumed everybody's doing interest rate rises. And the only downticks we've really had is when they haven't done it. So, but that's my advice. And to be honest, if you're trading anything on the hourly time frame or lower, it doesn't make a lot of difference, because on the hourly time frame, regardless of bias, this thing's going to go up and down all the time anyway. RSI is going to get you into positions where you can get out of trades regardless of direction. Doesn't matter. Just doesn't make any difference. But if you had a bias of 12 on something like the Aussie New Zealand long, you don't take shorts, you just go long. So if you get this thing go like that forever and it doesn't give you a pullback to give you an entry, you just don't get on it, you miss it. Because it's sod's law, by the time you go, right, I'm definitely getting on, that's when it'll do the pullback. So up to you how you use fundamentals, but you just have to be aware of, I use it more for forecasting and helping me position. So you saw me with the Euro US dollar this morning. If you weren't here this morning, you didn't. But in the live room this morning, as we were mucking about here, I put a stop loss in and said, right, I'm not sure about this today. I think they're going to put the interest rates up. And even if they do, I think the market will assume it's terminal and I think they'll drop it. That's exactly what's happened. I put that stop in there, and I then, just before the news, I was watching the market and I thought, looks like it might go long. And I removed it and I was wrong. But that's how I use news to time moves. If we get a big move in the market and it pops up to 150 ADR, I'm out. Because the move has been caused by that news event, and that could easily be undone. A-shape and V-shape recoveries on news events happen all the time. If you look at the US dollar, you'll see tons of them. Euro US dollar actually as well. But when you see a news event kicking in, it gets undone very easily. Yeah, big news, undone. Big news, undone. That one was a pullback in continuation. But you'll see A shape and V shape recoveries all the time. There's one there. Yeah, so there's one there. So it's basically a news event causing a spike, and then the market, it all happens with news is market overreacts. So that scorecard I've just shown you is a very dumbed down version of what the banks and institutions use. So what happens is when the news comes out, they go knee jerk, quick, it's bad news, sell it. And the analysts go, no, it's bad news at the moment, but what we're expecting to happen on the next CPI is a rise. So that will just cancel that out. Oh, right, okay, buy it. And the market just reacts in the opposite direction. So it's a knee jerk reaction. If you follow the smart money trader people, they'll tell you it's a stop run. It's not. Just the banks executing order. Why? Because there's a load of liquidity available around news, because institutions are trading it. So therefore, they use the news events to move the market whichever direction they want to, because the liquidity's there. If you're a bank and you've got to execute a $50 million order, and there's only $12 million worth of shorts available to you, you can guarantee around news that's going to go up to $40 million worth of shorts. So what you will do is execute all your orders at the news event, grab all that liquidity, and then go, brilliant, just done 3/4 of my job. And of course, as soon as that liquidity runs out, it comes back the other way. That's all it is, happening under the scenes. So you don't really need to worry about it. The long and the short of it, there you go, you don't need to worry about it. I want to get the EAs, but I'm technically inept. I'm not sure I can help you with that one, Jimmy. There's a Telegram group. We're always in there. So just come and ask questions. And I'm in here, obviously, every day. So I'm not going anywhere. Anyone doubting Lee? I did Bootcamp twice. Stopped system swapping and have only traded mean reversion for 6 weeks and have a 100% success rate. Good job. That's a bit of a misleading figure, actually, 100% success rate. You've been right on all of your trades. You probably have taken losses along the way on them, but overall on the positions, yeah, I mean, that's the goal of position trading. We get out of positions when we're in profit. So most of the time, 85, 90% of the time, when I get out of a position, I'm net profit. Same as the banks, that's what they do. AZ, it's not low risk, as when trade goes against me, I don't panic, as drawdown does not make me lose sleep. Yeah, that's another thing Jimmy's just pointed out there. Before I started as a position trader, I had sleepless nights, yeah, because I would enter on trades with 1 to 2% risk over decent stop losses. Yeah, what I now know as ADR, roughly ADR and a half, maybe as a stop loss. But because I had multiple positions on, I would be lying in bed and I would wake up in the middle of the night and I would open my terminal and go, I wonder what's happened in Asia. Because I would wake up in the morning to a 3 or 4% loss or a 5 or 6% gain. And I never slept properly because the amount of money that was on the line overnight, because I was using stop losses, was worrying. Have I been spread on that? Have they done at the swap? Have they got me at the swap? And I'd be waiting until like 2 o'clock in the morning to go and have a look and see if I've been stopped out on the swap overnight. Yeah, none of that matters. All removed from position trading. Lately, it's just a lovely way to trade. No lost sleep. He used to be a trader at Goldman Sachs, AZ. That's right. Yeah, no, you're right. Goldman Sachs. That's Anton Creel. But yeah, I mean, his stuff is very good. He's got a lot of stuff on YouTube as well. If you're interested in fundamentals, I mean, he is the godfather of fundamentals. So there he is. Have I spelled his name right? C-R-I-E-L. No, K-R-I-E-L. Sorry. Anton Creel with a K. So go and watch his stuff. This is a brilliant video. It's long, 2 hours. Anton Creel annihilates retail brokers and trading educators. This is what I go on about in here all the time. When you know what is going on behind the scenes in banks and institutions, as this guy does, everything you look at in a retail course, you just go, shut up. Rubbish. Just a load of crap. It's designed to sell you a load of crap. So yeah, go and watch his stuff. It's brilliant. But if you want to do his proper course, it's going to cost you. But I think you can gather enough information out of what he teaches on YouTube for free and his seminars. And he's not like a Greg Secker, yeah? He's not trying to sell you a course, then sign you up to his brokerage, then do this, then do that, then get this. Yeah, the course is the course. And they hold your hand through it. But it's a lot of money. And to be honest, I don't think you'll actually come out of it and want to do financial analysis, because they teach you financial analysis. You come out of it with spreadsheets. I think I've got spreadsheets from his. I'll just see if I can show you one of his spreadsheets. This is what's called an endogenous driver analysis report. Okay. Forget about what you can see on the screen, right? This is a score. This is what, right? Look at my scorecard. Yeah. Just to explain it briefly. Look at my scorecard. Yeah. Interest rates. +1, -1. Okay. Remember that for a minute. So that's my basic scorecard. This is what they use in banks and institutions, something along these lines. This is just the interest rate percentage analysis for the last 12 months. Look at the scorecarding here. Yeah. This is going back decades, right? Each of these is going to give a value of a 0.8, a 1.22, a 1.06, a 0.85. And on a proper scorecard, you have got GDP, CBBS, T10, government, non-farm payroll. I don't even know what that one is. PPIFE, PPIFGS, PPI, CPI, two versions of CPI. There's not just one CPI. CPI comes in actual 3 formats. Interest rates, M2 money supply, building permits, University of Michigan analysis, giving you a scorecard from +55 up to something else. NMI, ISM, GDP, cycle analysis. It goes on. And at the end of the day, what it gives you is this, which is a scorecard. And this scorecard gives you a score. If it comes out at 51, what do? Nothing. After all that, and you've got to do this and update this every news event, it gives you a score and says, don't trade. Yeah, that's what you'll come out of it with. You will know it inside out. But as for whether or not it helps you in your trading, unless you're going to be trading big money over weekly and quarterly cycles, it's not going to help you. But it will give you a very good understanding of what goes on in the banks and institutions, which in turn gives you an understanding of what all these people are trying to sell you. Crap. Every course. Crap. It's nothing to do with it. That's what it's to do with. And that's just an endogenous report on one currency. You then have to cross the endogenous reports of 2 currencies together, which gives you a cross report, which gives you a bell curve. Do you see what I mean? It gets so unbelievably complex, and you have to do it a few times to get your head around it. But I did the course. When did I do it? Years ago. I don't honestly know. Those spreadsheets are dated 2019. So that would have been just before COVID. I'm assuming this all still works now. Yeah, that's up to February. So this is, so you see me, I've been updating this up until February 2021. That's when I gave up with it. Not gave up with it, but stopped trying to use it because it was too complex. And do you know what you'll realize as well? Like I just said earlier, really, but what you'll realize is at the end of the day, these guys are paid 6 figures a year to do that. They then place the orders in the futures market. If you just look at what they're doing, you don't need to do all of that because they're doing it for you. This is why we use the COT report. It tells you what they've done and what position they are. Yeah, we know that at the moment, 67% of the futures market is long on the pound. Look at the pound. What's it been doing for the last 6 weeks? Yeah. So, but if you want to understand it, that's where you go. As I say, you will get. You think my course is difficult and you have to watch it twice. How much will you sell the new EA? I don't know. I haven't even thought about it. I haven't got it. It's too early to think about things like that. I'm not. It's not going to be expensive. Don't worry. It'll be the same as everything else, really. But you're entering on 0.5% risk on a 5K account. Your lot size is going to be less than 0.01. No, 0.05 lot size he was talking about, AZ. Oh, he's just answered the question. Sorry, I'm miles behind everybody else, so ignore me. I wonder if Anton Creel uses a stop loss. No. And all banks and institutions use soft stops, yeah, rather than hard stops. They will have a level where they will go, this isn't working, and they will have an analyst do an analysis on the position, the risk, the portfolio, everything, and they will say, right, scale out of X of that, give it another week, and then see what happens. Or DCA in, and this looks like the right time to DCA ahead of next week's news. Yeah. So they don't have a hard stop loss, but they do have risk. Yeah. You're not going to let a trade slide forever. But as you can see from the banks, they don't get it wrong. They know what's going on. They're institutional traders. They work for banks and hedge funds. They move the market. Don't forget, they also have the power. Goldman Sachs at any time can make the US dollar go up if they want to. By literally just buying a crap load of US dollar, it will go up. If they really need an instrument to move, they move it. This is what they call market maker desks. We've got them. They make markets, and they can make as much of a market as they want to. If they don't want, if our bank doesn't want the US dollar to drop, they will squeeze the positions. So people will come to them and say, want a short, want a short. They'll go, not today, not today, sorry. Go and make your market elsewhere. Go to HSBC. Barclays won't take it today because Barclays don't need it today because Barclays want it to get up today. And this is why I say there's 10 banks and institutions that run this thing. They've all got different priorities at different times, which is why the market moves up and down all the time because they're never in agreement. So if they're not in agreement and they can't tell which way it's going to do, how do you think a $200 course is going to tell you how to do it? Not a hope. And that's partly what Anton will teach you as well. Yeah, you can't predict the future. Are you hedging with position trading? No. You can do. It's something I'm going to probably look into again at some point because obviously now I've been developing this strategy for the indices. I have done hedging on position trading and I've built EAs to position trade, to hedge position trades. The problem with it is you tend to get yourself into a mess. So you can't, it's very hard to do the drawdown control when you're hedging because you will use a percentage of your hedge profit to do drawdown control. When you've got 3 or 4 positions on that you've also hedged, the hedge profit is quite small and it cancels out the drawdown control. But at a point, it still gets you to an area where you are uncomfortable and you need to do aggressive drawdown control to exit the position. When you start an aggressive drawdown control position, what do? Do you hedge the aggressive drawdown control position? So if you think about it, what you're doing is you're scaling into a larger hedge. So you're increasing your hedge risk. It just gets to a point where I couldn't make it effective. Doesn't mean it's not effective. People assume that hedging is what hedge funds do. It's not. Hedge funds, because they've got the word hedge in there, people go, oh, hedging. So they go long and they go short. They don't go long and go short. what they do is they hedge risk. Yeah. So on corn is the best example to use with a hedge fund. If you're a farmer and you are growing a corn crop, which is going to sprout in whenever, when you plant those seeds, it's 6 months before you get paid. So what you will do is you will look at the corn price now and you will hedge against the corn price increasing or decreasing in the future. So you will lock in whatever profit it is. So if the price of corn goes up and you've got a short hedge on, it doesn't matter if it goes up or down, you will lock in a price. When a company in Japan ships a load of goods over to the US and it takes 3 months to arrive and 3 months for the invoice to be paid, they will hedge the yen and the US dollar, so they lock in the profit on that deal. Yeah, the hedge funds aren't going in and taking a long on the euro and a short on the euro if it goes the wrong direction. That's not what a hedge fund does. This is where people suddenly go, hedging is taking a trade in both directions on a single instrument. That is a version of hedging, but it's not what hedge funds are up to. So people think hedging is a great thing because it's what hedge funds do, just because the name. That isn't at all the case. Hedging on an individual currency is locking in loss. That is what you're doing, as you see with me doing with the indices. What you're doing is you're locking in a guaranteed loss instead of taking a loss. So it's very tricky to manage and handle. And in position trading, I just found it very, very hard to manage. It works, but I couldn't handle it. I've got enough to think about without having to think about how the hell to get myself out of a hedge, as well as do drawdown control and analyze this, and too many things. But and the EAs I built didn't really have an advantage that I found anyway. Out of the NASDAQ. Brian is, not me. So you got in there, Brian, probably, did you? But yeah, it's not Friday afternoon. It feels like Friday afternoon. But I don't think we're going to get much movement today. As I say, we're in rotation. So have you ever used Bloomberg or Reuters terminal? No. Did you afford a Bloomberg terminal? I got a mate who works, well, not a mate, a person that I know that works for Bloomberg. He's one of the IT consultants for Bloomberg. I can't afford a Bloomberg terminal. $24,000 a year to have access to, in effect, what you get up here. Really wish it was Friday afternoon. Would be nice. But yeah, no, I can't afford a Bloomberg terminal. You got terminal tweeters, look. There you go. There's people that tweet out what goes on Bloomberg. Yeah. It gives you a news feed, basically, Bloomberg. So it gives you a lot of other data as well, access to all the fundamental data. But a Bloomberg terminal is as good as the person that reads the data on the terminal. At the end of the day, you're as good as a person that reads a candlestick chart. If you don't know how to read the thing, you're not going to do very well with it, are you? Which EA do you use their index hedge? This one. Yeah, this is basically it's the opening range breakout EA, but it's a variation that hedges instead of takes stops. Something new that I'm working on. Just a variation on a strategy, which is in development. Right, I'm going to leave it there today. As I say, there's not a lot happening on the indices. Looks like a good short at the moment, but it's just rotation at the minute, so we're not going anywhere today. Nothing much happening in the FX markets. Got some new positions on. Pound US dollar is my main concern at the moment. I've got an aggressive drawdown control position on this, which I haven't put a stop on yet. I took the stop off overnight so I didn't get stopped out, and I didn't want the stop on during the news in case it whipsawed. It's nothing worse than getting whipsawed out of an aggressive drawdown control position for a 2% loss on a tail. So I took it off. I'm going to wait until end of day today, and then I'm going to decide what to do with that aggressive drawdown control. It should have been here, the exit on that. I'm going to see if it pulls back up. If it does, I'm going to leave it overnight and then deal with it tomorrow. Because tomorrow we've got University of Michigan and a few other bits of news which might help. We'll see. Right, I'll leave it there. Anything else you need, let me know. I'll be in the Telegram group. Other than that, I'll be back tomorrow morning, 7:50, same time for the Frankfurt session, 2:20 for New York. As usual, we'll see if we can make some money tomorrow, because at the moment it's being a bit of a pain in the arse. FXs, indices, I'm absolutely killing it. But this is just not working at the minute. Brian, I'm long climate futures. All in, it will be colder in December. I don't think that's a good bet, Brian. It doesn't seem to matter what month it is. It's a heat wave, or it's a flood, or it's a heat wave, or we're on fire. It's a flood. Weather's broken. We've officially broken weather. Ask Donald Trump why it happened. It's certainly not climate control, so it's obviously something to do with the Chinese. But yeah, I reckon it will be colder. Climate futures, probably a good bet. Right, I'll leave it there. Anything you need, come in Telegram. Otherwise, back tomorrow. See you then. Have a good evening.